So when we talk about financial literacy, do you guys have like a framework or a process that you would teach somebody?
For me, it's kind of helping people identify the flow of money. You are the sum of the people that you hang around the most. And if you hang around people that spend, you're going to be another one of those people that spend.
You need to have at least two things going for you. The first thing is you need to make sure, we call it an ABC account. So that's going to be at least your emergency fund.
I can't imagine if you guys didn't have health insurance, like that would be game over.
Game over. We're so fortunate to be in the position where we are with the knowledge that we have with life insurance.
We can relate to somebody having to fill a death claim because we had to do a death claim on our own daughter.
You have the choice, parents listening, to look at this in two different perspectives. Exactly what you're saying, Caleb. You can look at this and say, okay, we're going to start our family legacy planning. And you have the ability to hack the system essentially by starting with your young children.
Your cash flow is ultimately a scorecard by your perception of value. It doesn't mean that I'm more valuable than you, but it just means that the market is saying they're putting a value on your service or product that you're creating in the marketplace. You said some things that I kind of disagree on. All right, welcome back to the BetterWealth Show.
Hey, thanks for having us.
I'm always love chatting it up with incredible people. And what I would love to do is, it's been a while since we've chatted. We've talked. We've had a whole episode talking about your guys' story, and I think it's powerful. I'll have links to both of our episodes down below. I used a little bit of clickbait, but it worked. So I think I was like Wealth Nation exposed. And got people to click and they got to hear your incredible story. And so what I would love to do is I'm like in the process right now of writing a kind of like a general wealth book. Like my heart is to be able to instill financial concepts into frameworks and principles and be able to walk through that. And what I love is being able to just like verbally process with my friends who are also creating content and have communities and all. And so with this, there's nothing like super particular we're going to be talking about, but my hope is to talk about debt and credit and how you guys articulate life insurance and what your current views are on infinite banking and things that you wish you would have known or wish you would have taught about. We might talk about whole life versus IUL because that's a topic that tends to get people, thought-provoking topic that gets people fired up.
Oh, yeah.
But then one of the things that I'm interested in is how do you get people clear about what's important? How do you break down how value creation is created? And so as you can probably tell, like there's a lot of things that we're gonna be able to talk about. And what's going to be fun is people will be able to hear how ideas are actually made and manufactured. And so with that, welcome to the show, and let me know what's new since you came on.
Well, thank you again, Caleb, for having us. What is new? So much is new.
Yeah, it's been over a year since we spoke.
Mm-hmm. Maybe even 2 years, Caleb. I don't know.
Yeah, it's been a while.
Yeah,
it's been a while, and
Darius has locks. That's the biggest thing is he's grown his hair. So but in seriousness, so what's happened since the last time we talked? We had our second daughter. So we currently have a 3-year-old, and our second daughter, who was diagnosed with a terminal illness. We had 9 amazing months with her, and she taught us about life. Honestly, she really taught us everything about life. And so with her life, we have been able to transform our own lives personally and professionally and what we do, because I think there's something to be said for selling life insurance and having your own daughter's death claim be sent to you. I think that just changes your business and your mindset and how you live life moving forward. But we very much needed that lesson in order for us to ascend, to become better people, to be able to serve our audiences better. And it's been the best blessing. So I would say that's the biggest thing that's happened since we last talked, Caleb.
Yeah. And I would say there was an assumption that money is pretty high on a totem pole, when money is a result of everything else that you've done up to that point. And life really taught us that with our daughter, because money was the last thing we were thinking about. But it's something that we talk about first when it comes to our content. So I'm sure you can probably see like a little change in how we present our content also because of the mindset piece that we try to go after, and helping people really understand like the core of how you make money comes from the way you think about money.
Yeah.
So we try to have some hidden gems in our content, and not so much money heavy, money, but money isn't everything. Money is a part of it, and it really comes much later after all the value's been added.
Yep. And I know exactly what we're going to talk about. And so I'm grateful for you guys being on. And if you're willing, I would love to ask a follow-up question to your 9 months. Please. And some of that you've learned. But just to go back to what you shared with Darius is like, yeah, money is a result. And I think a lot of times we focus on it, just like almost like focusing on the maybe a hole and not realizing what created that hole. And we're just fascinated with the hole, but we're not realizing that hole didn't just happen out of nowhere. Mm-hmm. And I think a lot of times people ask the wrong questions because they're not getting at the root of the real issue. And it's interesting because we both have a lot of content around life insurance. We're definitely going to cover that. And I think it's not that we've changed our minds. In fact, this probably is a greater conviction of why we do what we do. But the more I learn, the more life I experience, I get less convicted about a product and more convicted about like why we're actually doing what we're doing and the principles and the foundation. And it's because of those things that then you can be convicted about why we do certain things like life insurance and other. But it's like, beforehand, I don't know if you guys can relate to this. I was so like infatuated with the money, with life insurance. And now I'm like less infatuated with that, more of like, what do we need to do? Yep. And to figure out what are tools in my life that need to be alignment so that I can actually live this more authentically.
100%.
Oh yeah. You said that beautifully.
100%.
That's exactly it. And even within our own career and with our YouTube channel, like Darius said, you can start to see maybe maybe the tone in our content has shifted a little bit. And it's really exactly what you said. Like we were at a point where we were so product heavy, insurance. And now we're like, no, what is the vision behind what is that you're ultimately trying to do? Because what we recognize too is it doesn't matter if you get a policy with Wealth Nation, Better Wealth, with Jimmy down the street, you got to get the concepts and the foundations in place, because at the end of the day, none of us can help you if you don't have your vision clear and if you don't know exactly what it is that you want to do for your family.
Right. Because life insurance has performed the way it's performed for the past 100 years. And I can probably bet on it that they're going to perform for the next 100 years in a similar fashion. So if having a life insurance policy doesn't change, with just the policy, then I think it's time for us to start looking in the mirror as to how we're coming to those dollars, which is the real conversation, like you said, that we need to be having, that person in the mirror. And the nice thing about that is we can change it. Yeah. As soon as we make a decision.
Yeah. One of the things that I've realized is most people need someone to blame. Oh. And so it's like, in a way, if you actually, you'll become way more self-aware of like, we love blaming insurance companies or the stock market or your boss or your upbringing and all those things. I mean, there's valid problems. Want to be very clear with that. But I just was like, the moment you take responsibility is an amazing step of freedom, because you're taking responsibility and you can acknowledge there's the things that have happened, but you also need to take responsibility of your life. And I find that it's like, I was thinking when you talked about performance, just because the insurance companies are going to perform doesn't mean you're going to perform.
Amen.
And it's like, and again, a lot of times, like, it's people again want the scapegoat. And I think you almost have to burn the ships. And going forward, if there's one thing that you get from this is maybe just take responsibility. Part of that, and in writing, and this is going to sound so weird, but like literally I'm writing the Better Wealth book and I'm talking about forgiveness and the importance of gratitude. And I don't want to be a hippie that's like, gratitude and all these things, but I'm thinking like, what are the tools that are like vital? And it's like, man, if you have bitterness in your heart for someone, how can you be wealthy? If you're like, it's like, I've heard, unforgiveness is like drinking poison and hoping the other person dies. Like, it's just like, that's terrible.
Absolutely.
And like, if we're not able to be grateful for the life that we have, then it's like, there's just lots of things that we're thinking through. I don't know if you have any thoughts on that, but I want to go back to some of the lessons that you learned over the 9 months.
Yes. I do have a point real quick. So you were talking about victims. So I would say like our motto in the past probably 18 months is there's no such thing as a victim, and it's all about ownership. And I'm looking at Darius in the camera and I realized that we're twinning. We didn't even know that we're wearing the same shirt. That's what happens.
I love that.
That's what happens when you've been married for over 10 years. You just dress alike. So anyways, we once we adopted that principle, there's no such thing as victims. It really made us take ownership in many different facets of our lives, and also allowed us to have more compassion for people who do pull the victim card, because we recognize like that's just misplaced blame. And it's really been, again, transformative in our personal lives and also our professional lives, because then maybe we don't take things as personally. We can show up for people differently, but it's really just about that lesson of really recognizing where that blame lies, because we all have responsibility in it.
Right. And just to like the 9-month experience that we've had, a lot of this has been lessons learned from being in the NICU for 5 months straight, where you get this kind of like selflessness about yourself, where it's bigger than me. Like I can breathe, but she can't. And if there's anything I can do to make things a little better for her, if I'm holding her, she's hooked up to all these tubes, but I'm not. So you have an opportunity to say, you know what, I'm having a great day regardless what happens. Like I can't imagine going forward with life knowing that I woke up in my good health, and say that I've had a bad day after that experience. And we realize, like, since you also said that there's no such thing as a victim, well, everything that happens to you also happens for you. So the experience we had with our daughter was so that we can relate to somebody else that's going through some type of experience, whatever it is. But we have something that we can relate to. We can relate to somebody having to fill a death claim, because we had to do a death claim on our own daughter. Things happen to us, they don't happen to us, they happen for us, so that we can be a sounding board for other people. Yeah,
we can show up better.
Right.
Is there any like lessons? I know that Darius, you just shared a couple. Is there any other that come to your mind, like what you learned that have, because you guys have talked multiple times, like how you've shifted some of how you've shown up on YouTube?
Yeah. One big thing for me, Caleb, when we spent, morning, noon, and night in the hospital, was looking at all the other families in the hospital and recognizing, like, we're in a decent financial situation, but I'm looking at these families wondering, what is your financial situation like? How can you afford these hospital bills? How can you afford to be away from your work? Because Darius and I, we own our own business. And so we were able to show up at any point during the hospital, right? But when you have people who are W-2s and have to work, they literally have volunteers holding their babies, soothing them and doing whatever needs to happen, because they can't leave their work, because they have to work to be able to pay for the medical bills.
Imagine that, having to choose. Like in NICU, we're seeing babies on life support or with the monitors and stuff alone.
And then having to be that parent who has to go to work to have the financial means in order to keep their children in order to allow their children to have the medical support. So that was a huge eye opener, and like, we are missing the mark on our platform and what we can do for those out there, because we just need to get back to financial education. We need to get back to literacy. Financial literacy. We need to get back to figuring out how people can start to create passive income so that they can breathe easy. Like at the end of the day, we were like, damn, life insurance. Yes, that's our bread and butter, and that's what we do. But the bigger purpose is trying to figure out, how can we help families wherever we can help you today with what you need.
You said a lot of amazing things. I appreciate that. One of the things that you talked about a couple times was you death claim on your daughter. I can't even imagine. And if you don't want to answer this question, you don't have to. Just wondering the process. It's like, that's something no one ever wants to do. And yet I know you've in the past, I've in the past, like there's this concept of buying life insurance for your kid. I believe you can do it 10 days. What is the process like that? And like anything that you wish you would have known, or is it just one of those things that you did everything right from that standpoint, and unfortunately I guess share whatever you want to share. It's just one of those things that doesn't happen often, And I've never been able to ask someone their process in that.
Yeah, I think what was done right was from the start getting life insurance on her as early as 10 days old. Because when your child is born, you never in your wildest dream would imagine that they will be born with some type of terminal illness where they're not expected to live. And getting life insurance was the best decision that we've made, not just because we're agents, but because life insurance, when it pays out, gives you time to grieve, because bills come immediately. And as far as the process in filing a death claim, you can't file a death claim until you have an autopsy done and they have how she passed away. Mm-hmm. So having that process, having the hospital call you and say you have 48 hours to figure out where she's going to go because she can't stay here. They call you and ask for parts. And it's,
So what you're talking about, so the morgue, whenever a loved one passes, since we're talking about this process, typically the hospital will hold on to the body for about 48 hours. Mm-hmm. And you as a family, you have a quick turnaround to find a funeral director who will then take the body and move it. So, imagine going through all of this, and then the hospital is also calling and saying, hey, do you want organ donation? And there's a quick turnaround with that because, of course, organs only last so long. So you have about another 24 to 48 hours to answer those questions after you just lost that loved one. So then the funeral director's calling saying, what are we doing? How are we doing this? What are the caskets? What does everything look like? And then in that process too, what we also recognized very quickly was the funeral business is a cash business. So you can't charge this on credit. You can't, figure out how this is going to work. They want cashier's check or personal check. And for us, again, looking at this when they said, how are you going to pay for this? And we're like, oh, let me just go get my card. And they said, no, we need a check. And we were like, who can do this? Mm-hmm. Because for our daughter, the funeral expenses were $5,000 and she was a baby, right? So it's like, who these days has $5,000 cash that they can just write a check for? Maybe they do, great. But again, these are just things that you don't experience. Mm-hmm. Now, the thing as far as filing the death claim goes, the other part that we recognized too was you can make the arrangement with the funeral director where they will take some of the death benefit proceeds once that pays out and pay for your funeral expenses. So you can also choose that option if that's available to you. Because
they have the death certificate, and that's what you need to start the claim for life insurance is a death certificate.
You said autopsy. Is that because did you mean that like they need proof of death, is it just Okay. Yeah. Wow.
Yeah. So it's a lot that happens very quickly. Yeah. Right. So the thing that we recognize with this whole process, again, we're so fortunate to be in the position where we are with the knowledge that we have with life insurance. So we can only imagine someone who doesn't have the knowledge that we have. And we're literally going through this like, oh my gosh, yes, we just lost our daughter, but we can take this information and we can share it with people so that they don't run into these mistakes in the future.
Yeah. And the whole
just so that people know, like you can't get term insurance on someone under 18, but this is a permanent policy.
Right.
And whatever that looked like is if your baby daughter survived, it would be an asset that would be able to compound and do all the things that we talk about. But since she didn't, I'm sure a greater death benefit got paid versus what you put in. And that's just an example of my hope is that at least one person hears your story and says, you know what, I'm going to view my kids and start early, not out of fear, but just out of the principle of doing the right thing.
Absolutely. Yeah, because you have the choice, parents listening, to look at this in two different perspectives. Exactly what you're saying, Caleb. You can look at this and say, okay, we're going to start our family legacy planning. And you have the ability to hack the system essentially by starting with your young children, right? Because insurance is cheap. You can get a larger death benefit. And then, you're planning for this to be passed on to your great grandchildren, your grandchildren, all of that, right? And if for whatever reason, the life changes and like us, you have to bury your child, you also recognize that you also have this asset because as a parent, you may not be able to get back to work. you don't know what life looks like having had this experience and what things are going to look like. So at least know that you have insurance in any way to cover any member of the family whenever it makes sense.
Yeah. And it's especially everything in between that happens. Our daughter passed away on Friday, and on Saturday we were getting her ashes of the following week. So in the meantime, you have to you go online to file the claim. There's a little section, you hit file claim, you put in your policy number and the person, you send the death certificate as a PDF. And then for the most part, what they're doing is they're going to review your case. And that takes a little time. That takes a little time, regardless if you have everything in place. So our daughter passed away on Friday. Saturday, the following week, we had her ashes, and it took like another month before it actually got paid out. Not everybody can do that.
Mm-hmm. Yeah. Guys, thank you for breaking that down. And I don't know how openly you've shared that in the past, but I just appreciate you breaking that down. And my hope is that inspires action. I know it does for me. And so thank you for that.
No, thank you. And also too, to Caleb, you're the only one who's asked the question. You know, I know that it can be challenging to walk those roads, but we are open books because we recognize this is our purpose to be here on Life to share this. So whatever other questions you have, we're ready to share it.
It definitely took a lot of work to get to this point, though.
Yeah.
I people should know the intention and the thought that you guys don't do anything lightly. And walking through with you guys, and I know that we've talked offline a couple times. I've known that there's been a lot on your heart, and I'm excited for this next season because you guys, this is going to shape you and give you context and conviction that you've never had. And you've had a lot of context and conviction and ability to communicate. And so it's just one of those things where it's like, just want to thank you guys, but I'm excited for what you guys are continuing to build, because I just know how this is going to resonate with so many people and be inspiring. So thank you.
Thank you.
So when we talk about financial literacy, like let's break it down. Do you guys have like a framework or a process that you would teach somebody? Like, all right, financial literacy 101. We're not going to necessarily talk about insurance or products. Like, let's just talk about the process. Mm-hmm. How would you go about that? And maybe you guys both have two different versions. Mm-hmm. I'll share mine after you guys go through, but I'm just wondering like how ours are similar, how they're different. And I know that there'll be nuggets within them. Yeah.
So our process, I say we've taken bits and pieces from everyone we've learned up to this point. So what we recognize is essentially where someone has to be, because we recognize if people come to us, they probably want a life insurance policy. And we know that we need to coach them to get to the place where they can afford a whole life insurance, overfunded whole life insurance policy. So through that, what we determine is like, you need to have at least two things going for you. The first thing is you need to make sure, we call it an ABC account. So that's going to be at least your emergency fund. That's going to be at least $2,000 that you have in the bank, so that should any emergency come up, you do have some capital on hand. And again, this is our audience specific, right? And then from that, we suggest that once that account is built, then you're going to have something called a stash account. And we consider that at least 6 months of income saved. Now, the ideology behind that, Caleb, is what we recognized early in our business is as we were getting clients into the Wealth Nation system, if they didn't have some of these sound financial habits in place as far as savings is concerned, then what happened? An emergency came up, and then next thing you know, their policy premium is jeopardized because now they have to pay for this emergency, and now we have to figure out ways around trying to maintain their premiums and keep their policies on the books. So those ideas came out of how can we help our clients maintain their policies better. And in addition, we know that with what we teach, we are obviously probably going to use a policy loan to pay off debt, to invest, to do whatever the case may be. And again, it goes back to all these sound financial habits that we hope that we can help people instill through getting this whole process to work. Because again, if you don't have those habits in place, then how are you going to pay your loans back? How are you going to charge yourself interest? How's this whole thing going to work so that you can create this sound financial system that we all talk about if you don't have these practices in place?
Mm-hmm. For me, it's kind of helping people identify the flow of money. in their lives. Money is a result. So if you want to learn a story about somebody you've never met before, look at their bank account, and it'll tell you a story of whether or not they have good financial habits and the people that they have around them. A lot of times you are the sum of the people that you hang around the most. And if you hang around people that spend, you're going to be another one of those people that spend. So your network is your net worth. And as we talk about the flow of money, like, for example, a lot of people think that, look at a dollar and be like, oh, it's the value of it is $1. But that dollar doesn't know that. If I have $1 and I give it to Carmen, and then she turns around and give it to you, and then you give it to somebody else, that value it's been used 3 times. So how many times has money that $1 been circulated, and how much value has it added? Now, when we think about the circulation of our own money, we only use it 1 or 2 times. It comes into our account and then we spend it and it's gone. What we need to start thinking about is how we can keep that money in circulation for ourselves and use it over and over again, because we have examples in our lives of banks being able to do it, other financial services that are able to use money over and over again. And it's nothing wrong with looking on somebody else's paper. It said it was wrong, when we're in school, but in life, you need to look and see what other people are doing with their money and start adopting some of those things for yourselves and having the right people around you, the right friends around you.
So it's not cheating, it's collaboration.
There it is.
Yeah, there's so many good things. I'm going to wait till we talk about life insurance, but the using your dollars more than once concept, we'll go back to that. And if we don't, the listeners will make sure we miss that. So let's make sure to follow up on that. I've done that so many times. I'm like, all right, and then I never do it, and people let me know. What I want to point out, appreciate just that's the beauty of different thinking, because I have a way of teaching like a framework, and it's very much more principle centered. Mm-hmm. It's very less tactical, like the $2,000, the stash accounts and all. Yeah. But for me, I have the 5 C's.
I like it.
Essentially, it's like you have clarity. Okay. You have clarity, and part of clarity is you got to know thyself. You got to know where you're going, but then you also have to know the clarity of the metrics. Mm-hmm. So if we're going to say that wealth is intentional living, like you have to we got to identify what is wealth. And then, but you got to, first of all, be able to identify where you're at. Yeah. And because a lot of times it's like, I can't give you a strategy, or a doctor can't say this is what you should do if they're not diagnosing. But then we also need to be able to reverse engineer intentional living and say, these are the metrics. In business, we call them KPIs. Yes. But what are intentional living metrics to know, like, I am actually living my intentional life? So clarity is like so key. It's like nothing to do with money, but everything to do with money.
Yes, it does.
If you're not headed in the right direction, then why are we even talking? Then when we talk about the second C is cash flow. Mm-hmm. And there's a lot of important financial metrics out there: net worth, rate of return, return on risk. The lifeblood of your financial life is cash flow. Like the example is, this is a morbid example, but if your heart stops beating, you're dead.
It's real.
And here's the deal is you might still have your net worth, your mass of your body, but it's not alive because there's no there's no blood flow. Mm-hmm. So I think it's there's obviously, I'm simplifying this, but it's the concept of cash flow is a very, very important financial metric. And so we use that as the metric to say, okay, when we start looking at certain things, cash flow is going to be the metric that we're going to compare. And we're not going to be emotional about this thing is good, this thing is bad. We're going to use cash flow as the financial metric, but ultimately the thing that trumps it all is our intentional living metric, which goes back to the first C. Mm-hmm. But we have to understand, when we have cash flow, your cash flows needs to be created. So then we go down to how do you create cash flow? It's auditing your time, your relationships, your skill sets, and your resources, and saying out of the overflow of those things, you're creating either a service or a product, and those service or product is creating, the perceived value of that is going to create cash flow. Cash flow just comes by result of the perception of value of your output. I know I'm triggering some people, but your cash flow is ultimately a scorecard by your perception of value. It doesn't mean that I'm more valuable than you, but it just means that the market is saying they're putting a value on your service or product that you're creating in the marketplace. And so that's interesting. But once you have that, so we could talk all about, you know, do you need to reverse engineer how you're spending your time or your skill sets, or we could talk all day long about that. But once you have it, your money's only capable of doing two things. It's either, it can be saved, which is a verb. It can be controlled or saved, or it can be consumed. And so consumption could happen like going to Starbucks. Consumption could be medical. Consumption could be taxes. Consumption could be giving. The idea of consumption is it's gone.
Yes.
Control, I would say save, but I needed 5 C's. Okay, so I needed control. Controlled was this concept of like it's a savings, and it's more of like you're doing something with that. So once we break down, so cash flow and creation of cash flow, and now we look at both. If money's only capable of doing two things, it makes it easy. So let's look at consumption. Consumption is the cost of your life. If someone makes $100 and they save $10, that means that the way that it costs them $90 to live their life in this analogy.
Yes. Yeah.
But we just look at where that money's going, and they're spending their money, they're paying taxes, that's going to debt. And so we look at certain things like, is your debt aligned? Is your credit aligned? Are you overpaying on your taxes? Are you spending money on what you value? And hate to say it, but those are the 4 areas that most of your money's going to. And if all we could do is help people get really intentional with where they're spending their money and understand that debt, look at debt like a portfolio of assets and say what's serving me, what's not. And then credit, how having a good credit score versus bad credit score can really enhance that. And then a lot of the people that we serve have a tax problem. They're overpaying on taxes. That's one of the things that we do, is we can help people pay less in taxes by really understanding fundamentals of taxes. But then when we look at controlled, the control element is, okay, money that's not consumed is controlled. Yeah. And for us, it's that emergency opportunity. So it's like build that emergency fund. And the ROI of emergency funds are amazing because it's like it allows us to show up more powerfully.
Amen.
Then you have opportunity, and opportunity should be invested in assets. And the definition of an asset is something that is valuable, that creates cash flow. Not all assets are created equal. We reverse engineer. You are your greatest asset, so make sure you're not undervaluing yourself. But then we just go through what you invest in might be different than I. And our good friend Garrett Gunderson talks about investor DNA, which I love because not everyone's created equal. So it's really identifying what assets bring you most intentionality, but also most cash flow. And a lot of times people are not aligned. They're diversifying too early, and they're diversifying their ability to even have an impact or make a dent. And so it's identifying that, but the control aspect. And then the final C is just cover. Make sure that you're covering your financial process from, we don't know what's going to happen. You guys are a perfect example of that. So make sure that you're doing risk management, because we can't eliminate risk, but we can manage how risk is going to affect us. We can, the definition of risk is your chance of loss. So you guys are a great example of like, the medical bills were staggering. And if you didn't have the proper insurances in place, it would be crippling.
Oh man.
That's an example of risk management of I can't imagine if you guys didn't have health insurance, like that would be game over.
Game over.
And so that's the framework of like, and there's no right or wrong. It's just like the beautiful thing about frameworks and processes is it just gives you places it's a process of how things flow and mindset. And I think some of the best frameworks and processes take mindset and money and concepts and bring them all together. But ultimately, you're only as good as someone implementing it. And that's where Dave Ramsey, his 7 baby steps, we could probably poke holes into it all day long, but it's people are following it.
It's a framework.
And I would rather have I would rather have someone follow the 7 baby steps and not follow anything in general.
100%.
So I know I talked a ton. Thank you for listening me out. But what are your thoughts on what we're talking about?
Oh my God. Well, you got me so hype over here. I was going to say, Caleb, who is your mama and daddy? I need to meet them. We need to have dinner and, obviously take responsibility because a lot of this is you, sir. But damn, Caleb, like I am just I'm like, what was I doing in my 20s? Like this just, oh, you inspire me so much. But yeah, everything that you're talking about. So let me pull up my notes again. So clarity. Absolutely. That's everything that we talk about as far as what we've been learning. And again, we're on the same path, right? We've been in the business long enough where we recognize if our clients don't have clarity, we can't help you. We would love to serve you and get you a nice fancy policy. But if you don't know what you're going to do, then you're going to come back to all of us and be like, you sold us a bunch of crap when you probably have an amazing product, but you just don't know what to do with it. Right.
Or even understanding why we tell you, no, it's not a good time for you to get this type of policy. And you need to start looking at your income a little differently.
Mm-hmm. Yeah, absolutely. Cash flow. We were literally just talking about this. We had a retreat with our clients over the weekend and getting everyone to see the importance of cash flow. And I loved how you broke it down. It does two things. And that's where you strip the emotion away from it. You're either going to use it for consumption or you're going to control it. And with control, I love what you said. That's an intentional action, right? And we were talking about too with our clients over the weekend, banking. So when you said saving is a verb, we were like banking. We were adding banking in the sense of being intentional because there's a bank, right? And then there's banking. And banking is taking action and doing something with it. So you're either going to consume and control. I love that because now also too, as a couple, right? We're thinking about our clients who are couples. This also helps remove another layer of probably blame or whatever you want to call it in the conversation. If a couple comes together and they're trying to understand their finances, and when you can just break things down simply and categorize things, this is our consumption bucket, this is our control bucket, that takes the blame game out of things when you can just put facts to the process and the goals that you're trying to accomplish. So yeah, I think everything that you said is phenomenal.
Love it.
And I like the fact that it's where you can have a conversation about it and everybody be on the same page that's involved in that conversation. Because it's one thing for us to talk about these life insurance policies when people have even no idea what a whole life insurance policy is versus a term policy. So we have to start our foundation on something that we can communicate clearly about, and we both have defined definitions as to what it is. Clarity, cash flow control. We know exactly what that means. Yeah. And we can't start the conversation about how you use your policy or even buying a policy, how you use the policy and how you create a system around it without that foundational information.
Yep. Well, yeah, I love it. Love it. Love conversations. I even love more disagreeing. So I don't love that we're agreeing with everything. We got to find things to disagree.
Yeah. My bad.
You got to give us something to disagree on.
I'll say some controversial things.
Yeah.
The 60 is controversial.
Very much so. Very much so.
Let's go on to life insurance.
Sure.
You guys are big fans of whole life insurance, and you've talked a lot about banking, infinite banking, all those keywords. What would you say now that you wish you would have, or I guess maybe as you reflect back on your career, the videos that you've made, the convictions early on, how you what things that you shared differently now than what you did early on? Like, I'm just going to give you the floor to kind of like share your process in that. And obviously, like, I bet your conviction has increased, but for different reasons.
Mm-hmm.
Yes.
One thing I would say is, the illustrations. Like we go through illustrations and comparing policies to different companies and different load levels. A lot of times that doesn't, now we're at a point where it really doesn't matter, especially if you're not going to do anything with it.
That's the key.
And a lot of our clients, I wouldn't say a lot of our clients, but a lot of people that we come in contact with, they just want a policy or a high cash value policy, and they don't do anything with it.
Yeah.
Yeah. Yeah. And it's really like we get into the weeds, right? We spend hours going over the different products and how they perform and the dividends and the cash value and all
And
of
the
this.
companies.
Yeah. And it gets really into the weeds. And we spent a ton of time in our earlier career just trying to explain, that this whole process and what happens. And once we recognize, like, we went through all of this just for somebody to sit there, a policy on the shelf and not do anything with, and then call us 6 months later and be like, oh, I'm supposed to use the cash value. And we're like, are you kidding me? So it's those moments where we recognize that, like, yes, we will sit down and go through all of the mechanics with you. At the end of the day, though, really the game changer is going to be if you actually take a loan and you pay it back responsibly, because, company A can pay better dividends, company B could pay lower dividends. And if you have a policy with company B who has lower dividends and you're actually using the policy and paying yourself back the interest and everything, you'll probably blow company A out of the water because you're actually using the policy. And so I think that that's a significance that we've learned of just, again, going back to the clarity of what is it that you want to do. And then also too, going back to the clarity, I'd say for our growth and in our processes, like, we used our first policies to get ourselves out of credit card debt. And as we've grown and evolved, we've recognized how powerful we can use an overfunded cash value life insurance for a retirement play. Especially for that. And it just depends on what makes sense for you as the client, but just looking at this from a completely different scope and the utility of what it can do for you, so that it's not always just kind of like the blanket 50-50 split or whatever it is. Like, no, let's crack open the laboratory and figure out what are the specific goals that you're trying to accomplish, because we can design a policy around that.
Right. And the idea that there isn't a secret. Like, I think delivered our information as if we were talking about some big secret, but there's no secret. There's no special policy, no secret sauce, none of that stuff. And we want people to buy life insurance policies with us. But I mean, at the whole scheme of things, especially after the passing of our daughter, we want you to have life insurance, whether you get it from whether you get it from Denzel, whether you get it from Allstate down the street. Get life
Don't
insurance.
do that. We're online. So don't go to all. No, I'm kidding.
At the end of the day, make sure you have life insurance. Yeah, State Farm. Yeah,
yeah, exactly. Not Jake. Don't call Jake. And one other thing too, Caleb. I recognize the value of term. So I know that we're whole life agents, right? And that's what we sell. But we also recognize that there's, to Darius's point, there's a large group of people out there that can't necessarily afford whole life and still just need life insurance. With all the research that we've done, we've noticed that 50% of Americans don't even have life insurance. And of the 50% that do have life insurance, 30% of them are underinsured. So that means there is a huge opportunity to cover your assets in many different ways in an affordable way where you could convert the term when it makes sense for you to have a whole life insurance policy. So bringing term on board from a strategic play of like, let's just cover the gaps. And then when we can move it over to a whole life, then we'll do that. So that's definitely been an evolved thought process of ours.
Mm-hmm.
I love it. We actually own convertibleterm.com.
When you told me that several months ago, I was like, damn it, Caleb.
We're not it's in motion, but we're gonna because I agree with you. It's like term insurance is super important. It needs to be talked a lot about, more about, and it's gonna be something that we're gonna stay tuned. Perfect. Stay tuned, subscribe for more.
Beautiful business play.
Yeah. So my question for you is, you guys said I set you up because you said some things that I kind of disagree on, but we can talk about it and it'll be great.
Let's do it.
So let's first talk about term insurance. Mm-hmm. It's not a disagreement. I love this. My question is, when do you recommend term over whole life, or what is your framework on how someone should get life insurance in general? Because what I found is, I'm setting this up a little bit, but that some people want overfunded whole life, but they only have a few $100s a month, and at the end of the day, they're not properly insuring themselves and their family. Totally. And so we're actually doing them a disservice by giving them whole life, thinking they're protected, but they're not. What's your process in making sure someone's protected, number one, and making sure that whole life doesn't get in the way.
Fantastic. So what we actually learned this from one of our clients just this past weekend. He called us a few weeks ago and was like, hey, this is the scenario. So I'm just going to lay this out for him and his family. So he said that he asked his wife, if something were to happen to me tomorrow, what would you do with the house and all of our assets? And she said she would sell them. And he was like taken back by this and was like, what do you mean you would sell everything? And she's like, well, to make sure that we can afford everything, I'd probably have to sell like our home and our land and a lot of stuff. So that prompted him to call us and go, I need more life insurance. Wow. And as we looked at the numbers, right, it just wasn't in the budget for him to have whole life right now, but it was in the budget for maybe another $500 a year for him to have, you know, closer to $800,000 of death benefit to cover that gap that they would need. And so what he's doing is getting term insurance on himself that he will convert within 10 years into whole life. And with what was in the budget was for him to get a whole life insurance policy on his wife and his children. So he just had to look at the amount of money that he had to spend, play with the numbers, and use life insurance strategically to cover all of the family's gaps and the needs. So when he taught us that, and we thought that was amazing. And that's something that we have always been thinking about, right? You know, every time we get a whole life insurance policy, we recognize that typically we're loading it with as much cash value as we can. And that's going to change the ability of what we can get from a death benefit standpoint. So we're layering in like whole life term to just continue to expound on that. And then also what we recognize again as parents from another play is the more death benefit that we have as parents, that means that there's more death benefit on the table available for our children. So we are doing ourselves a disservice. And going back to our daughter, Isabel, who passed, what could we have done differently? Get more life insurance on her, get as much as we possibly can. And we know that we can do that by expanding our death benefits.
Mm-hmm. Well said. I think getting really clear about if this thing happens, what's the gap, and reverse engineering it from there is a great place to start. Mm-hmm. And what would your spouse do kind of deal? That's a great place to start. I think a step further could be like just human life value. It's less emotional and being like, I'm worth, like the insurance companies will give me $5 million because it's like, I'm going to maximize that. That is, and quite frankly, like maybe financially the better way to go about it, but it makes a way more sense to at least make sure that you're covering making sure that you're on the same page with your spouse or your partner, and then just know that the limits. And like, I love the fact of like, hey, I'm going to get as much life insurance as I possibly can, because insurance companies are never going to incentivize you to be worth more dead than alive. Exactly. It's kind of messed up saying, but just, you know,
it's not good, not a good business practice.
Yeah. And so it's just one of those things where I appreciate you sharing that. Here's where I want to just clarify. We don't really disagree, but I think it's important that we talk about this, because I do see people out there getting this stuff mixed up. Is we talk about policy, and I literally wrote this down, Darius. You're like, illustrations don't matter, which I know they kind of do, but they kind of don't. And I agree with you on that. The policy 1 versus policy 2. Let's say policy 1 performs a little bit better than policy 2. Mm-hmm. But let's say policy 2, you use it and it allows you to live more intentionally, have greater cash flow and all that stuff. You could look at life 2 is in a far better position than life 1. Yeah. Technically though, life 1's person's policy is still more efficient. It may still be better because when you pay yourself back interest, you're paying the insurance company back. And so the insurance policy itself, I find a lot of people, like, they almost think that if they use their policy, like their cash value will be greater. Yeah. And that's not necessarily the case, but what is the case is how you use it determines the quality of your life, but they're two separate things. And this is where I want to talk about is a lot of times I think, you know, people that talk about banking with life insurance or whatnot, they almost combine it all into the life insurance, where I find that gets confusing. Whereas it's more of like a life insurance and your decisions. It's like internal growth, external growth, combine that together and figure out result versus. So I just want to hear your thoughts on that, because I know we're aligned. It just, I'm going to pick apart language because people are listening, watching. And I know that, you know, some people don't make the distinction between external, internal. It's all about paying yourself back. And I find that like we have to be realistic with the activities that you're doing. And my next question is going to be on the activities, but I want to hear your guys' thoughts on that.
Yeah, you're absolutely right, and thank you for clarifying that. We on the platforms that we have to tell the whole story and be clear on our words. So you're absolutely right. The insurance, when I was saying that the illustrations don't matter, I'm talking about when you're comparing the exact same policy with the similar company.
Correct.
You know what I mean? That's all I meant. Illustrations do matter because what we can do as agents, depending on the product, we can also tell a story that isn't necessarily close to the truth. And that's if we're able to change a dividend on a policy, that isn't the best idea because dividends change within policies, and some policies have dividends that aren't realistic. Like for example, an IUL, like that, it's not realistic for some of the ways those can be manipulated. When it comes to a whole life insurance policy or dividend paying whole life insurance policy, there's only so many things that we can do within those parameters of what you're trying to explain to us you want to accomplish. And it also has a guarantee that we can, at the bare minimum, if everything just goes to crap and a huge section of the population gets the Thanos snap, it'll still pay out.
Love that.
Yeah. And the other thing too, I think it's also clear to go back to talking about illustration. And again, Caleb, thank you. We really need to be specific because we know how people can get in the comments. So with an illustration, it's important to know too that your illustration on day one is going to look different on day 367. The reason being is because now your dividend hopefully has been paid out, and that's going to change the numbers. So when you sign on the dotted line and you say, this is my illustration, it's going to change because we're assuming that dividends are going to continue to be paid out. And as long as the dividend projection was what was quoted on the illustration, that might change, that might not change. But if it does, now your illustration is different. So that's why we say what we were saying, cheeky, like illustrations don't matter, but it's really like things are going to change. And this piece of paper that we show you today is going to change significantly with or without your action. So when you get in the weeds of trying to compare companies and this and that and this and that, we've been in the industry long enough where we're like, it's going to change. So
it's almost an equivalent of a 3% savings account versus 4% savings account.
Exactly.
4% savings account could be better on paper, but the stories might be different. And it's like, we both know how ridiculous it would be to say the savings account isn't the reason why you're retired free. It's how you used it.
Exactly.
And so and just so you know, like in the industry, majority of it is a kind of like the thing that is said, like illustrations are kind of like toilet paper. Like it's the thing that like it's the best thing that we know today, but things change. One thing I will say is the moment you get a dividend that gets paid, the guaranteed column on whole life every year will get better. It has to, because it's like their base guaranteed column is assuming you never get a dividend ever projected out. The moment you get a dividend, then now it needs to reset. As it relates to the non-guaranteed column, you're totally correct. It could be higher, lower depending on where interest rates are over time, but it goes back to the savings account. Yes. We're not going to blame the savings account for where we are, and that's very much, I think, the mindset that we all have is like teaching people how to think like a bank, think of like the flow of money, and going back to what you talked about earlier, getting your dollars to do multiple things. It's interesting because I think that's accomplished even if you don't borrow against your policy, because money in a life insurance policy, you have a death benefit. It's going to grow the rest of your life. It's going to give you the ability to be used. It's chronic illness rider. There's, tax benefits. It literally, life insurance definition, you put it in, it gives you multiple jobs, which is amazing. And what you do with it.
Absolutely.
And that's where it's like, that's where the flow. So that's where I fell in love with the asset and really became convicted, because I was like, wow, we're able to give families the ability to double, triple, quadruple the uses of their dollars without even using it. And now they get to use it. And it's like, wow, that's amazing. Whereas other accounts are very singular when you compare it to life insurance, but you have to value things that you can't necessarily measure as a rate of return.
Right. Right. And the fact that it's separate from the market. I think that
non-correlated asset.
It's a non-correlated asset, and with that, you get there's a sense of relief that I get when I see the market go up and down. And we have clients that operate within the market, and that's fine. But it's nice to know that when it goes down, I don't have clients that are dependent on that. You can let the market be like a game that you play rather than your life that you're playing with.
Yeah. Well, the thing is, a lot of people use the market as their like foundational retirement strategy.
That's it.
And it's like, we get to choose. No, the way that we help our clients, it's like they get to choose, but their foundation is built on something way more foundational than volatile. And that's what I'll say about that.
Moving on.
Going on a way crazy rant. I don't think YouTube wants to hear that.
Talking about disagreements, Caleb. You just set that up for a whole bunch of disagreements.
What else do we want to talk about? This has been amazing so far. What else is on your...
From you, Caleb, my younger, older brother. I want to know from you, what has evolved for you in your business and what you've learned.
Yeah. So I, early on, I wrote The And Asset, and I was very, kind of obsessed around like, hey, when life insurance is set up and used properly, it's an amazing asset. And I think very similarly to what we all learned, like life insurance is amazing. I think just a lack of wisdom of like, I put way too much emphasis on the insurance, and very much what you said, Darius, like, is the insurance policy structured properly and all those things. And I just assumed that like people would have the mindset of control money, be their greatest asset, because I was living it out myself. Like, started BetterWealth when I was 21 years old, took huge risks, brought on our first team member and paid them more than I was taking. Like, I was looking back, I'm like, wow, but it's like, this wasn't on accident. Like, we have a company because of me practicing what I preached. And yet, so I was living it out, I was experiencing it, but I was essentially projecting a message that was like, life insurance is the thing that's going to be like the game changer for you. And now I look back and I'm like, okay, I really missed the mark on that. And it's mindset. Mindset is huge. And as fluffy as that sounds, like, I joke, I don't necessarily want to be the hippie that's like just telling you to like think positive thoughts and gratitude. That doesn't necessarily translate into outcomes. But I think in a way, if you don't own and take ownership, if you don't take ownership of your life, if you don't get clear about what you actually want, it's almost like the, Alice in Wonderland at the fork in the road where the cat's like, where do you want to go? And she's like, I don't know. And the cat's like, well, if you don't know where you want to go, any road will get you there. And there's so many, that's like so prevalent. And another thing that's prevalent is people are totally okay being controlled. Like, people are very okay being told what to do and being a part of the system. And it's almost like there's fears that people don't want to lean into. And I've realized like, this doesn't sound like a financial planner, but it's like, we need to like figure out like, what are you actually afraid of? You afraid of other people's opinions? Cause I was, and I had to like really lean in to be like, am I okay if like people think I'm a total doofus? Like, am I okay with that? And I'm like, am I going to live my life based on what Wealth Nation thinks, or based on what y'all comment in the comment section, or based on our clients? Like, no. And it's like, I do care what you think. Like, I read every comment. I like, I'm not someone that's like, I'm right. I want to be like, I love when people give hate. Yeah. I love that. I mess with our like people that give like really horrible messages. I just like, I want to thank you for taking time to write that. I really am. Like, I'm grateful. Like, I have a ton of love in my heart for that, because I think it's just another thing that's just like, identity is huge and really getting rooted. So going back to my development is like, you're seeing me like start on the product side. And now I'm talking a lot about mindset, because if you could give me money or mindset, I would rather be a free man and be broke on paper with the mindset than have tons of money, but not truly living the life that I want. And so it's like, if you can start there and have the money, it even gets better, because money is a fuel, money is a tool. And so that's kind of what I'm like realizing in myself. But what I'm hoping for is I want to make intentional living the new standard. I want every financial company to start changing their language around you're not wealthy if you're not living intentionally. And what's cool is life insurance space is a very small space. I've been starting to see some of our messages that I can't take credit for, but some of the things that the way that we say it, other people are using it. And I love it because I think it's making everybody better. Same way I take other things. We're all borrowing from each other. My hope is if I did one thing in Better Wealth, it's to make intentional living the metric that's non-negotiable for people. And that's like your financial planner is now a life coach because they're getting really clear about what you want and they're reverse engineering your cash flow, assets, liabilities, and all that jazz to make sure that it's alignment to you living free and living intentionally. And so that's we're getting clear on that. And obviously you guys know this. We're going to be launching some communities and some services and that have nothing to do with a product, but have to do with the process. And I'm excited about that because it's like, I love helping people with taxes. I love helping people with life insurance. I love helping people with like retirement income strategies. Like all those things are good. I cannot wait to create a process that like people self-identify as like, I want to go through that and really help them. Last thing I'll say is, you know how a lot of people are like, you need to have a niche and all these things. And a lot of people are like entrepreneurs. I think both of us love serving entrepreneurial minded people. I have identified, I think I've made up this word, because I looked it up on Google and there wasn't a definition, but like value creators. Now, of course, people talk about value creation and all that, but it's like, I want to make a value creator the metric, like our niche. So you don't have to be an entrepreneur to work with us. You just need to create more than you consume and have the mindset of my life is going to create more, give more than I take. And I'm realized like for me, it's less to do with like how you pay your taxes. Is it W-2 or 1099? And more of the mindset of, are you a giver or are you a taker? Do you create value or do you give? And do you create value or do you suck value out? And that's for me. It's like, I'm very clear that we want to serve value creators and hopefully help them create more value in the world. And so those are some of the things I'm thinking about. And it's always fun to like have conversations that I'm able to like flesh this out because this is very therapeutic for me as well. Like very selfish of me to bring you guys on.
Pull up the couch. We got you. How did that make you feel?
But it's fun. And it's also like, I see YouTube as just a documentation of like what we're going to be doing. Another thing that you're going to see a lot more is like, we're going to have a call-in show. We're going to be able to interview people. We've done this thing called Naked Numbers and I'm going to continue to do it, but I see what Dave Ramsey's been doing and other people and like it's iconic. It's like people call in and they have conversation. It's just like, we can criticize all day long, but they're making 10 pieces of content to our one. And their 10 pieces of content get 10 times or 100 times the views than ours. So it's like, so let's start taking what they're doing and let's see if our message resonates different. Maybe a person calls in the Dave Ramsey show and they call in the Caleb Williams show. The answers may be a little bit different. And my hope is that people will be able to discern and take the things that they like, discard the things that they don't like and doesn't serve them. And so those are some of the things that we're are thinking through. And stay tuned. It's gonna be fun. And I'm grateful because I think there's gonna be a lot of collaboration in our futures, and just very pumped about that. I'm very grateful for your guys' message, your company, how you show up. The interacting with anyone from your community is incredible. And so just want to thank you and commend you for what you guys are doing.
Thank you, Caleb.
Thank you.
And I had to give you some kudos. So it sounds like you have a lot of clarity, my dear, with what you want to do personally and professionally. And like you said, you have to live it because you can't expect anyone else to come behind you if you don't have the clarity yourself. And you've had the clarity from a young age. So you continue to inspire us, inspire your audience. So thank you for just allowing us to fellowship today.
Yeah. To that, you said it. You said a lot, Caleb, and there's a couple things that I do want to hone in on. And one of the things was the mindset being the thing you want to lead with. And for me, it was like, man, look at this. Like it's an example of your network and the people you're around being on the same page, which is why we're able to be on your Better Wealth show, is because we're on the same page when it comes to mindset. One of the secrets for Carmen and I, since our daughters, we have a mindset coach. just for mindset. And I think without that, we wouldn't have been able to come through the experience and pull out the proper education from it without this mindset coach. One thing that I got from the passing of our daughter is to lead with love. That's something that you said. As long as you add love to everything that you do will always work out. Because there's one thing that none of us can do is that's buy our way to heaven. There's no tickets that we can purchase for that. Yeah. So if love is the only thing that's going to get us there, then we need to love as much as we can, as often as we can, and to whoever we can love, in using our platform for that.
The mics are not droppable, but if they were, thank you both. And what's the next step? Like, how can people follow what you guys are up to? You guys have amazing YouTube channel, lots of good things. How can people get connected to what you're up to?
Thank you. Well, you can check us out, wealthnation.io. Where we have a community that we are building. Our goal is to get 60,000 members into the Wealth Nation community. So if you are interested, we will take all the Better Wealth homies and we will love on you so much. And Caleb's actually been inside of our money school and spoken to all of our students. So the idea
when it was 12 people in there.
Exactly. So the idea is, yeah, see, but look at that, right? Caleb came in and loved on our folks because of the love that he has. And also he knew that the vision was there. But again, regardless of whom you're working with, we just want to be able to educate anyone wherever you are, so that you can create that clarity for you and your families. And, we're also working on a project to figure out how we can serve our families on the other side of the death claim, to make sure that they have everything that they need when they need it in their time of need.
Carmen, Darius, thank you.
Thank you.
Man, thank you so much for your time. That's one thing we can't get back. Every time I hear your voice, be I'm watching your channel or on a phone call, even right now, I'm very grateful to be able to call you a friend.
Ditto. Thank you and ditto. And I'm grateful for what's to come. There's a lot of fun co-creating with great people, and yes, the best is yet to come.